when they squeeze the money supply, all those assets, the tech equities, the Bitcoin, they get hammered down. But if I make a list of all the things that cause Bitcoin to trade down, if I make a list of the parade of horribles, right? Let me name my pain. and they're all going to reasonably reverse in the next decade.
Welcome to Dream Richer. Do you think Bitcoin can go to zero? Previously, it was something many investors used to say as a joke, but some believe it could soon become a reality. Today, the billionaire playboy Michael Saylor talks about the gloomy-looking situation for Bitcoin and what he thinks about its low price. As he argues, many factors are to blame for this downward trend. For example, interest rates, inflation, and other macroeconomic factors can all affect how confident people feel about putting their money in risky assets. Because Bitcoin isn't a stable coin, and therefore isn't pegged to any real-world asset. Hence, it can be just as susceptible to crashes as many of the other cryptos in the industry. If you follow Bitcoin and its price, you've likely seen that there's often no knowing what will happen next. Many investors never see a crash coming, and this is why putting money into crypto can be dangerous. By the end of this video, Michael Saylor unravels the Bitcoin price conundrum. If you find the video helpful, then don't forget to subscribe. Let's get right into it.
Depending upon whether or not you're short time frame or long time frame, you see it differently. And I think that in the near term, it's pretty clear it's a risk asset, and the Federal Reserve is going to control all the risk assets. And so when they squeeze the money supply, all those assets, the tech equities, the Bitcoin, they get hammered down. To your point, it seems reasonable at some point they'll lighten up. We're going into the midterms, right? So the things that are constraining risk assets right now are the war, foreign relations and the war in Ukraine and the Russian foreign policy and the monetary policy. And those could very well change. If they don't change, then all the risk assets will have a hard going for the next year to 2 years. Let's zoom out a bit, because I'm not a high-speed trader. I'm not a highly frequent trader. I buy, I don't sell. So if you look at the decade and you look between here and the year 2030, or look out 8 years, there's a macro trend going on. And the macro trend is the demonetization of equities as some of that monetary premium flows into Bitcoin, and the demonetization of gold as some of the gold's monetary premium flows into Bitcoin, and the demonetization of bonds, and the demonetization of investment, second home investment, real estate. So all of those things are store of value. They've been monetized. It's simple to prove they've been monetized by just checking their correlation with the Fed balance sheet. And as the Fed expands, and their asset prices increase. The difference between today and 2008 and 2000 and 1990, whatever, two, and 1974 is, in 1974, you had this massive macroeconomic chaos, and we monetized gold. And gold went from $34 an ounce to $800 an ounce, right? And that was the safe haven, and you could argue we monetized crude oil, right? The petrodollar, and there was a big adjustment. This is the first time where we've had the potential to monetize a digital scarcity, which is what Bitcoin is.
Let's imagine that one day, every country in the world illegalized the trading, mining, and spending of Bitcoin, and its price crashed to zero. While the network itself could still remain intact, such a drop would still cause monumental financial losses for millions of individuals worldwide. There would be no way to sell Bitcoin back to exchanges, as they would be legally required to delist it for trading. In short, Bitcoin investors who hadn't already cashed out would be in an impossible situation. Moreover, the total crash of Bitcoin would send huge waves through the crypto mining industry. The Bitcoin mining market alone is mammoth in size, with many relying on it to make a living. With Bitcoin no longer having any value or use, mining rewards would fall to nothing, and almost 1 million miners would be forced to find another revenue stream. Mining farms would also have to close, causing the unemployment of thousands.
If I make a list of all the things that cause Bitcoin to trade down, right? If I make a list of the parade of horribles, let me name my pain, and they're all going to reasonably reverse in the next decade. But here's what they are. 1, wash trading. You can wash trade crypto and you can wash trade Bitcoin, and there are no wash trading rules. This is volatility inducing. This is not good, because it means that if you trade down 10%, you're probably going to trade down another 10%, because people are going to, a trader is going to say, I'm going to sell it at a 10% loss and buy it back at a 20% discount and ride it up again. So wash trading is an immature affectation of the asset class. You shouldn't be able to do it. It could be fixed by Congress and the House Ways and Means Committee. When the IRS or somebody fixes it, then the asset will be less volatile. The crypto exchanges, offshore and onshore right now, are unregistered, unregulated, and they offer 20x leverage. They don't have mature Chinese walls separating their market makers. Sometimes they make a market. In some cases, they own some of these tokens. They unilaterally decide when to list them. There's information leakage. If you had 20x leverage trading on Apple stock with no wash trading rules, Apple would be a lot more volatile asset. And so with the NASDAQ. So the unregulated crypto exchanges are liability number 2. The third is the crypto tokens, 19,000 unregistered securities.
It's clear from Michael Saylor's explanation that Bitcoin may be affected by volatility in short term, but not when you zoom out. For example, look at the current Bitcoin price over a 5-year chart, and you will see the impressive gains it has made. With that said, it is technically possible for any cryptocurrency's price to crash to zero, as seen with the Terra Luna price crash. But for something as popular and valuable as Bitcoin, some huge shifts would need to take place to allow for such a catastrophic loss of value. Destroying Bitcoin wouldn't be the same as taking down a website. Its complex infrastructure, along with its decentralized nature, gives it a strong foundation that isn't easy to destabilize, even if you are a powerful government. Do you think we could ever see that happening? Let us know in comments below. To learn more about the latest crypto news, watch these videos here.